So let me get rid of these indicators so we have less in the way. Okay. So look at this on the S&P 500, because the reality is ever since we got the ETF flows from Bitcoin, we're starting to slowly trade more correlated with the S&P. Okay. So what's the S&P doing right now? Well, let's just first show the relationship between the two. So S&P starts pumping, you see Bitcoin start pumping. Okay, so you see right here, we'll put a couple of parallels here. So S&P rips here. Okay, well, it starts ripping right here. Okay, as soon as it starts ripping, you see Bitcoin take this next leg higher. Oh shit, we just got a live subscriber. Oh, hold on, let me pull it up. BB Alexis. What's going on, Alexis? From Twitch. See? You see what happens? We talk about Twitch. Exposed goes live. Was he on live on what, Kick?
Oh, Kick, yeah.
Ah, Bomba Clot. Yeah, rookie mistake.
No, that's a vet wise decision.
To go live when we are?
Oh, I meant on Kick instead of Twitch.
Oh, yeah. Yeah, no, yeah. Subscribe on Kick. Kick is a studly. So you see this correlation with Bitcoin and S&P, right? So as the S&P pumps, we see Bitcoin pump. Whenever S&P pulls back, right here, look what Bitcoin does. Same exact thing, okay? S&P pumps, Bitcoin pumps. Well, it started pumping right here. So you see how Bitcoin pumps, S&P dumps. Okay, you see Bitcoin starting to come down. Okay, so what's the point of looking at this? Well, we got to start to draw some type of signal outside of Bitcoin in and of itself, because Bitcoin isn't giving us signal. So if we're getting correlation with the S&P 500 and we're getting correlation with the equity markets, and Bitcoin is inevitably what's going to raise the prices of all of our other assets as Bitcoin moves up, we got to understand where's the S&P at right now. Okay, so there's the correlation. We see the correlation. Okay, S&P is correlated to Bitcoin or vice versa. Bitcoin's correlated to the S&P. So we want equity markets to start ripping again in order to get Bitcoin to start ripping again. If equity markets continue to nuke, well then guess what? Unfortunately, Bitcoin's going to start to draw down as well. So I see a couple of different scenarios playing out here. So let's look at the S&P directly. Okay. So you see something happening here on the S&P. You got this kind of, we can call it a range. Let's do it like this. So you got this kind of range playing out on the S&P where we keep interacting with this $6,000, $6,100 level, right? So this seems to be a very important level on the S&P. So this was price discovery here, 61, 61.5, okay? And we keep rejecting on this level. So we pumped up through September of 24, October, pump up into November 24, pump up into December 24. And notice that's also whenever our altcoins topped out at. So notice the confluence there. So S&P's topping out here. That's when our altcoins topped out, and that's when Bitcoin started topping out. Okay. We reject at that $6,100 level, and then the S&P starts sideways price action, consolidation, okay? We come back up, we reject, come back up, reject, come back up, reject. We're getting all this rejection here, 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 here. False breakout, nuke back down, and now we got this little bounce right here, okay? So if we want to know what's going to happen with Bitcoin, right? We got it. What's that, beautiful, right? Picasso. Studly drawings. So we gotta think, well, what do we think is going to happen to the S&P right now? That's got to be our guess. And so, I mean, do you have any, what do you think, Bees? Because I just wanted to show the relationship, but what do you think of equity markets right now? Do you think, personally, I'll say this. Personally, I could see this level coming down and getting hit one more time before we blast back off. So that would be the bearish scenario. Okay, so if we do get this drop back down here to this, what is this $5,700 level on equities, you're going to see Bitcoin do something similar with a pullback, and that pullback would be coming down to get the liquidity at 85K, which would be right here. So the liquidity would be hiding right on that low, that wick right there. So we would come down and sweep that wick on Bitcoin if we do this on the S&P. Okay, that's the correlation we're looking at. So two things we want to be prepared for, and then I'll pass it to you, Bees. If this plays out on the S&P, Bitcoin comes down, sweeps this liquidity, that's not bearish as a whole, okay? Because when the S&P does that, we will pump back up higher later this year because the Fed still has a bunch of tricks in his back pocket to lower interest rates. They still have that in their back pocket. They can stop QT, which is quantitative tightening, okay? They could stop QT and then start to put liquidity back into the market, start to grow the U.S. balance sheet, okay? And then as S&P starts pumping higher again and takes its next leg higher, Bitcoin with it, all of our assets with it. If that doesn't happen in SPX, the S&P 500 just does something like this, bounces off of this mid-range and inside of this golden pocket and just bounces back up into the price discovery, then yeah, Bitcoin does something like this to about 91. Maybe we sweep this low and then we're pumping back up again, okay? So it's good to be aware of both scenarios. The question is which one's going to play out, and we got to be prepared for both, right?
Yeah, I mean, honestly, I don't pay any attention to equity markets, even a little bit. I know I definitely should because I know that they're definitely the good especially the SPX. I think it's definitely a good indication of what Bitcoin's going to do.
Right.
And I know a lot of people do pay attention to it. Personally, I haven't looked at that chart in 6 months. So I don't really have an opinion on it. I mean, I know you pay more attention to it than I do,
Right.
for sure. Yeah, I don't really have too much of an opinion on that. I mean, I think that the big thing is going to be where Bitcoin closes. So I think that if Bitcoin can close above where it opened for February, I think that's going to be super bullish for March.
Right.
So I know you had the February open level on there. One of those.
Yes. Let's see. I got all these fucking drawn here. There it is. February monthly open.
102. So yeah, I mean, we like honestly we were pushing close to that, I believe, at the end of this past week. So we were back up about 100,000. Then there was that Bybit scam bullshit news that came out right when Ethereum was pushing about 3,000, Bitcoin was pushing about 100K. This Bybit bullshit comes out, like the $1.5 billion of crypto was stolen or whatever.
Right.
Which kind of threw a wrench in the whole program. But for me, I think personally that news, it's like shit like that happens. I mean, I don't think it's going to be like a long-term structure change in what Bitcoin's going to do. I think obviously it had an immediate effect on the market. I think on the lower time frame, obviously it did have an impact and kind of beat up the sentiment a little bit more.
Right.
But, people are going to forget about it. They're going to move on. And yeah, again, I think that today is going to be a fade for the rest of the week. Hopefully this is the low getting put in. Or the low was already put in this morning for the rest of this week. And then, yeah, if we can close, because what's the last day of February?
28th. So
it's Friday.
Yeah.
Yeah, so I think Friday, if we can close above 102 on Bitcoin, I mean, that'd be fantastic. So yeah, I don't pay attention to SPX too much. So if we can, in my opinion, just looking at the Bitcoin chart, if we can close back above 102 to close out February and open March around 102, 102.5, March is gonna rip fucking hard.
Hard. Yes. And I'm in the same opinion. You're going to get one of two things. And I know it's difficult to wait and be patient, but those are the people who are going to make the most money if they understand the scenarios that can play out and then being patient in positioning. So March, I could see us fucking ripping face in March, which would make sense with the seasonality of crypto and Ethereum itself, which is what we're heavily invested in. I could also see us continuing to range through March or draw down lower through March and then in April, May, rip. Okay, so both are absolutely possible. It's just, okay, what's the S&P doing? Because that's essentially what's going to give us our move on Bitcoin, and then how well does Bitcoin hold up compared to that? So I just drew something on the S&P as well. The S&P, just so you guys understand, the reason Logan and I don't pay attention to this that much compared to the other assets is, number one, look at this chart. Okay, this shit is up
Scammer.
only. It's a scam. Okay, so just so you guys understand, the reason they have you all invest into your 401ks is because it's just always a constant bid for forever of all of human time on the S&P, because your 401ks invest in the S&P. So it's liquidity for these markets, so that over time these markets are always going to trend upward. Okay, so the way that you make a lot of money is if you understand when these happen, right? These bear markets, so you know to bid at these lows, and then you benefit from this move when it's up only. Okay, so if you look at the S&P from the last bear market, which was in 2022, yep, exactly, January of 2022, we topped out December of 21. This is also the last bull run for crypto. We create this downtrend. So you see how the S&P respects this downtrend. So you come up, you retest the trend line, nuke. Come up, retest the trend line, nuke. Come up, retest the trend line, nuke. Finally, we break out of this trend line, and then when you see we get a bullish retest of this trend line on the once it breaks through, and then what happens? As soon as we retest this trend line, look at this, up only. Okay, so now we have this new trend line on the S&P, which you can draw from. You could draw it from here if you want to be super conservative. If you want to be more, let's call it less conservative and make
Aggressive.
be more aggressive and try to well, conservative in the sense that this would call a breakdown a lot easier, because
This line,
this line, if it broke down from this line, then you would say, okay, we're going to go into a bear market. So this trend line has not been broken either. Okay, so there's nothing on this S&P chart that tells me, okay, we're about to go into a 1 year bear market. Get the fuck out of crypto. Get the fuck out of stocks, etc. Start to look to buy lower. There's no trend that has been broken here. This thing is fucking parabolic. Look at how straight up this is moving. So until we lost this trend and say, okay, here we come. Oops. And then we come up, retest. Oops. Okay, now we're looking at this. We got to get the fuck out of markets. But that hasn't happened yet. And truly more conservatively, or not conservatively, more aggressive would be this low, because we're still not in a downtrend. Everything's been a higher low. Okay, so until we break market structure on the S&P, we're still bullish overall on markets. The question is when is the local low going to get put in? So now if we zoom back in, it's always important to keep larger time frame in mind. We zoom back in on the S&P and we look at this structure right here, and we say, okay, what are the levels that we got to be looking at on the S&P to see where Bitcoin's going to go next? And
I think it's funny because like what you mentioned about the 401ks and stuff, it's like I think that the S&P 500 does do a good job of giving a overarching idea of how the markets are performing as a whole. But it's just funny, yeah, you have an asset that millions and millions of people are incentivized to invest into, and then they're extremely penalized for touching it. So it's like, imagine you have something like Bitcoin where people are incentivized, or, you know, they're given a match whenever they deposit their Bitcoin, or maybe they're given a stake. Like I know they're coming out with the ETF for Ethereum that is going to pay people. What's the word I'm looking for?
Yeah, they're going to get yield off of it.
Yield. Yeah, they're going to receive a yield from holding the Ethereum ETF. So it's like whenever you have an asset that people are incentivized to invest into and penalized severely for selling prematurely,
right?
It's just going to be up only. It's like it's the most manipulated asset ever. It's crazy because I've thought about it before, but not in a while. But yeah, it's just funny. It's like, and then you think about, okay, whenever this asset does start performing poorly, it's not the average investor, it's not the individual that's messing with the chart. They're not touching it.
Right.
You know, even people who are retired, who are over 65, they're not just completely cash withdrawing their entire 401k. They just contributed to it for 40 years. Now they're benefiting from compound interest. They're not going to pull out either. So it's like when it is performing poorly and the trend reverses and it breaks structure, who do you think's on the sticks?
Exactly. And I had this thought before I quit my corporate job, and I had a conversation with a couple other people who still work corporate and they have these 401ks, etc. I told him, I thought of this independently before I even got into investing to this level. Why would every company in the entire nation have 401ks for their employees and make it super important that you invest in that 401k? They match the 401k. They penalize you for taking out of that 401k before 59 and a half years old, etc. Huge tax penalties. Why would they do that? Is it because they really like you and they really want to help you make money and get rich? Or are they trying to incentivize you to do something that benefits them? Oh, now I realize these 401ks are mostly invested in S&Ps and index funds. Well, the S&P is what? The top 500 largest companies in the entire country. So yes, you are incentivized as an investor, somebody working a job, to do that because it's going to grow your money over time. But more so, it's an incentive for the people who are in financial markets to have a constant flow of liquidity into the markets. So now you have, 200 million, 250 million people across the country who are consistently putting in liquidity into the markets. Therefore, the large investors can use that to be able to make their moves, right? So when you want to take control of your own portfolio and understand how these markets work, and this is what we're trying to educate people on, this is how you can start to invest like the quote unquote smart money or the big money, where they see these opportunities, they see these trends. You get these 1 year long bear markets, they're scooping up everything at the bottom, while Mr. 401k was buying all the way up, buying all the way down. He's not taking advantage of any lower or higher prices, right? He's just perma bidding. Other people, they're selling the tops and buying the bottoms, right? Mr. 401k is perma bid even through bear markets, or even through the peak of a bull run, which is clearly not what you want to be doing.
The infinity buy enjoyer.
Exactly, the infinity bidder, the Mr. 401k. So there you go, ladies and gentlemen. That's why they want you to buy.